Happy Friday, everyone. I'm Philip here from BlackBull Markets. Hope you're all doing well. Now, we do know NFP is coming up today, so I'll be focusing on mainly the USD pairs, and also I want to be looking at the US 30, or if you guys also know it as the Dow Jones. Another thing I want to be looking at is how we can potentially be looking into our trading, knowing that there's going to be a major news event, how we can be managing our trades, and also what we need to wait for, and certain things we need to be aware of before we do decide to trade NFP. Now, before we do dive into this video, guys, make sure to click that like button. Also, subscribe to the channel if you guys are interested in learning more about Forex or improving your current Forex skills. Now, without further ado, let's have a look at what we're looking at and also talk about that little bit of an event that we do know as NFP and how we can kind of manage our trade. So we know, obviously, when these big news events come out, or if you guys aren't familiar with them, these big news events tend to cause low liquidity or uncertainty in the market. We have seen it over and over on the board or in the chart. That's what I'll be showing you guys soon in this video or later on in this video, so make sure to stick all the way through to the end. But we do know there's a lot of uncertainty and liquidity is low. Now, what I mean by liquidity is there are not a lot of traders balanced in the market. Now, what we need to understand as Forex traders or any sort of trading, there are two pools, buyers and sellers, and these need to be pretty much lined up with each other in order for there to be a lot of liquidity. So the more buyers and the more sellers there are, the more liquid a market is, the more likely your trade is going to get executed, and also the tighter the spreads will be. Now, when these big news events come out, people tend to stay away from the charts or stay away from the USD pairs. We tend to see spreads go up, which means your trades will get executed at a higher position if you're looking to place a buy, or your stop loss might actually get executed without the market even reaching it because your spread is so high. Now, that's the one thing we need to be aware of when we do start looking at this. So let's say, for example, this is the current market price. Now, with NFP being started, let's say if you're going to be trading on 30-minute time frame, on 50-minute time frame, we might have a spread that sits a little bit higher than the market. So this is our bid price and that's our spread price. So the spread could actually increase a little bit. Now, when you take a trade, let's say, for example, I want to buy this AD USD, you'll get executed higher over here, and you won't get executed as tight as where it used to be because obviously there's not enough liquidity and the spread bumps up. Or another thing is, let's say you want to take a sell. So you put a sell, your sell order gets executed on the ask, on the bid price, and you put your stop loss just above, and this spread can actually come and kick you out, right, because it does one up. So the price might not have to move and the spread could bounce up and actually take you out of your trade. So we need to be aware that that's the one sort of problem that we need to know of when we trade during NFP. The other one is, like I mentioned, that liquidity. Now, if there are not a lot of traders, there's not going to be a lot of liquidity. So what that means is when you place a trade, your trade actually might get executed a little bit later. The last time I traded NFP, exactly when the news came out or exactly when the event got released, I actually got slipped 32 pips, and that was the very last time I traded NFP. So now what I tend to wait for when I'm day trading, I wait for the market to for the news release to come out and the market to gain a bit more or settle down a bit more, using that volume from the market or volume from the news event to continue further high or further lower, and then start to look to execute trades. Because if you are going to trade as soon as that news release comes out, there's going to be no volume. All of a sudden volume is going to kick in, the market's going to bounce up, your trade's going to get executed at a much higher price than you intended it to be, or a much lower price than you intended it to be, right? So that's the one thing we need to be aware of when we do trade NFP. So make sure you guys are very aware of it and make sure you trade safe and also manage your risk very, very well. Now let's have a look at the charts and see what we can be looking at, and you guys will see how much uncertainty there really is in this market. First chart we're looking at here is AUD USD. This is the daily term time frame. Now, we saw the market actually break this high. We saw it push above, right? Push above the area. We saw a nice rejection, and we're now starting to approach this sort of resistance zone right over here, right? So we can see the market is approaching these wicks, is starting to slow down a bit. We had this nice sort of candle rejected right over here, and the market could now start to look potentially to push further higher. It could start to slow down as well as NFP comes in. People are waiting, anticipating what's going to happen. So we could potentially be consolidating a little bit between these two zones before the market either decides to, or NFP uses it to break further higher, which we could see. We could see the initial breakout and then move a little bit further higher. But generally speaking, when NFP does come out, we tend to see it use the news event or the volume of that sudden news release to push it to its extremity. So let's say, for example, we had the market sort of sitting at a support/resistance zone and it uses NFP. We had a nice sort of top over here, for example, and it could use that last bit of news release to pop it up and just go touch that zone, and then might immediately push back down just to reach that area, right? So we've seen this play out a lot, especially in gold. We have seen it happen quite a bit, okay? So let's have a look at the next pair. Like I said, I'm going to be looking at a lot of USD pairs. So the next pair I want to be looking at is our most famous Euro USD. This is the most famous pair to trade. Volume is, or sorry, liquidity tends to be extremely high in this, because when you're new to trading, the first thing you hear about is Euro USD. That's starting to change now with a lot of social media things out there and the way trading is going. We see GBP, JPY starting to become a very liquid pair, but we'll stick to Euro USD as it is still the most famous pair to trade. Okay, daily time frame. We saw a break of this low. I'll zoom in a bit for you guys here. We saw a break of this low. Markets now starting to continue further to the downside. We have not really seen any support until we look at the weekly term time frame. We can actually see here we are approaching a bit of a resistance or support. Sorry. So we can see here support's being approached, and we are starting to dip into a consolidation zone, right? So if we do happen to peak into here when NFP comes out, or even prior to it, we could really struggle to go inside, to find any moves inside of the zone, right? Ideally, we want to stick above the area, right, or even push all the way back down to its low, and then start looking for moves for the higher, either next week or later on in the month, or if we do break below, we can start looking. But really, we don't want to be trading sort of in this area over here, because the market could really struggle to come down to here, and then we might start to see, like I said, rejections, because it is now then a double bottom for us to break out, or to reject on. Okay, so that's one thing we need to look at. And then the other pair I want to look at for you guys is GBP USD. Now, if you guys are wondering, well, I'm not really going into much detail of it, is because NFP is coming out, and the main thing I want you to be aware of is right now, in my opinion, it's going to be very difficult to find any moves in the market as we approach NFP. So I want to be looking at the bigger picture to get an idea of what we could potentially be looking for next week, and what we can be aware of in the market for future trades, because ideally for me, I'm not really going to be looking, like I said, for any moves coming up today. Okay, this is again the daily term time frame, GBP USD. We can clearly see still, very, very nice downtrend market moving to the downside. We continue to see lower highs and lower lows. So obviously market continues to go further lower. We're starting to reject now here on this support. We can see we have a major consolidation zone approaching. We're starting to reject on it, right? So we could potentially start to see during the European session a move to the upside. So I can look at the low term time frame for this one, right? Because we do know this is a pound pair as well, so we could have the European session play out in a bit. But you guys can really see, ever since that gap we've had on Monday, this major gap over here, market has really struggled to play around the zone. We're really sitting where that gap got, where the gap pushed to. We can see the gap opened right over here, and the market is really sitting on that zone, right? So if I can actually get a tool to draw it a bit more accurate, I'll get a little box here, so you can see that the market is really struggling exactly where that gap opened up. We had some pushes out later on. We saw a nice zone re-entry, not really any moves on that zone, but I'll talk to you guys. I actually want to show you guys sort of how we could have re-entered that trade, or potentially taken that trade, even though we had this massive candle to the upside. So I'll show you that in a second. I just want to mark out these zones for you guys quickly as well. Okay, and then we obviously have that major resistance coming up. I'm going to draw it a little bit lower, purely because we can see we have internal support / resistance zones, and they're kind of what we usually use because they tend to be quite strong, and I'm not going to be using these extremities. So let's zoom in a bit, and then we have a look to see how we could have taken this trade. Right, so this is the hourly term time frame. I like trading on the hourly term time frame. Anything 30 minutes, 15 minutes tends to, for me personally, tends to give me not as clean signals. So the thing I usually go by is when the market, let's put it this way. The higher term time frames you go, the less entry signals you get, but the higher quality they'll be, right? But the lower you go on your time frames, the more entry signals you'll get, but the lower quality they'll be. So that's kind of what we need to be aware of. So if you guys are looking to swing trade, you'll be taking a lot less trades, but the trades tend to be a bit bit more of a higher quality. But if you guys are looking to day trade, obviously you're going to get a lot more entries, so you need to be focusing on, you know, certain time frames. So for example, if you're going to trade during the Asian session, one thing you need to be aware of when you trade the Asian session is obviously the rollover time period. So that's when all the settlement rates gets sorted out between the banks. So we'll see our market watch clock, if I can pop that up for you guys. So right there, you open up your market watch and you see that clock right over there. That as soon as that hits 0, that's when the rollover comes open. The market's going to be a bit more quiet. It's actually going to close for a couple of minutes, and your spread's going to pop open wide because there's no volume in the market, and it's just not a great time to trade, right? So that's kind of where you see your rollovers going, when rollover is going to happen. So the Asian session is a bit stuck with that one, which, you know, is a little bit unfortunate. But then we dive into the European session, so you can focus on about 3 hours within the European session, and then obviously that crossover from European to the US session was a very good time to trade as well. And that kind of lowers down the amount of trades you'll take as well, because if you're a day trader, obviously, like I said, you'll get way more entries and way more signals. But you could be trading all throughout the day when there's no volume, and you'll be getting really, really bad entries because the market just won't give you your moves or anything like that. So this is why we stick to the certain time frames, because when that volume does kick in, you're ready, and you can then take proper or nicer entry signals instead of taking all these little ones that tend not to give you much volume or much movement at all. Okay, so that's kind of one way how you can manage it. But let's get back into this again. So again, like I said, I like trading the hourly term time frame. Actually, I want to zoom in a little bit more for you guys so we can see this structure right over here. So if you guys remember, this had zone re-entry, and we had this massive candle popping up. So not really any entries in there. You know, if you want to take a trade, you don't really want to be taking a buy over here, stop loss over here, and target up over here. I mean, you can see your reward versus your risk is not really that great. Okay, so we want to tie it up a little bit more. Now what we had here, this is where we can use candlestick analysis. Yes, swing traders still use candlestick analysis, and I do love it. I use it a lot for my entries. We see the support sort of being played out right over here, previous resistance, market pushed up to that zone, pumped back down, and then use the support to continue further higher. We had that beautiful engulfing candle close. Now I'm going to use this wick as well. I love using the wicks for zones, so we really have a major support / resistance zone right over here, and you guys can kind of see what that next candle does. Big rejection, closed above the zone, above that previous candle high as well, and right there was a really nice entry signal. So what we had was our entry. You could even have waited for this candle to open, to this next candle over here, to go above the high of that close, of the open of that candle, so we could have entered over here, stop loss down below here, and then take profit nice up here. Now we can see our reward versus our risk. It's a much, much nicer trade to take, and it gives you a little bit of a tighter entry. So that's why we kind of want to use these sort of candles. Another thing why we don't, ideally, I don't really like trading big candles like this, is this was a really nice example where the market did go up. But generally speaking, as soon as we get a big candle that closes, that massive, such a big candle, we tend to see a reversal that comes all the way back down. And now in this instance, we didn't, and we got a nice confirmation that the market's ready to continue further to the upside. But we had this, remember, just beforehand, big candle, close to the downside, and the next one actually completely rejected and pumped back up and closed way above that zone. We saw it here again. Okay, and we'll see what happens here now. Okay, but almost every time we see major candles, we tend to see some sort of rejection in the market, okay, because there's an extremity, it's where the market is rushing to a support or resistance and then looking for rejection. Now, if you guys sort of see this structure over here, we are starting to see it over here play out as well. So we do have this internal support / resistance area here. So we could potentially be, again, looking for buys further to the upside, right? Okay, now our European session is starting to approach. So we could look for nice trades. We need to keep in mind, this is where it comes into handy. This is where it comes a little bit into handy when you trade the short-term time frames or day trade, because once that session kicks in, we get the volume to break past these supports or past these resistances, and that allows the market to continue further high. Now, if you were in a regular time, we can see there's not really a lot of market volume, so the market's generally going to be struggling in between the zone until a session opens, and bam, we get a nice trade to the up or to the downside. So we need to really wait, in my opinion. if the market does continue to have this structure, if we look at this structure the whole time, then yes, we can start looking to the upside, because this is a big indication of the market is ready to reject. But if we're starting to see sort of structures like this, we don't really want to be trading until, you know, we break out of the zone. So breaks above will be nice, or breaks below will be pretty sweet as well. We do have support coming up. 1.32700, 1.32680 is roughly where we're sitting at with that support. So we need to be aware that could be a pretty good, you know, target for us to look for the move to. Okay, bit of a long explanation, but you know, I want to help you guys out as much as possible. NFP is generally a very dangerous time to trade. Now, looking at the 4-hourly term time frame, I do like this as well. You know, we're starting to see a lot of wick rejections. The market is really struggling to even close on that zone. So we can potentially look for the market to even wick down a little bit and then start to move further higher to that support right over there. So that could be, you know, could be a very, very nice move to the upside. I'll quickly look at the daily term time frame before we do move on. You guys can see the daily term time frame looks like an absolute nightmare. It actually looks like a barcode, right? You can probably scan it and see how much it costs. But yeah, it's really not a nice thing to look at. Really messy. I mean, if you look at it like this, you know, on this high term time frame, you can't really see what's going on. You know, is it going to go to the downside? Is it going to go to the upside? You know, we just can't tell from this mess, right? So that's one thing we need to be aware of, is always look at the higher term time frames. Look to see what the market can give us, and also look to see what the market's not really ready to do yet. Okay, now again, I always mention this, as traders, we're not here to be right, so I can't say this price is going to go up, I can't say this price is going to go down. I'm just here to react on what the market gives us. That's why I popped down to the lower term time frames. I've got rejection here. You know, there could be a potential move to the upside because we're sitting on support, but mainly I want to be waiting for the market to break above, because that's the market saying, hey, look, I've broken above its resistance, I've ignored this, my direction is going to the upside, I've rejected, let's say for example, a support, and now I can start looking to the upside. Now again, even though the market gives me that, I might not be right? The market might still come up and just pump back down again, like we've seen over here. You know, we had a beautiful close below that zone, and the market just decided to, yep, I'm going to go back in again. But all we can do as traders is, you know, pay attention to this. This is why we have good risk management. We have stop losses. We have take profits. All this is here to help us either take money off the table when we have money, or to protect our capital. So we have to be very conscious of this. You know, it's not just about placing a trade and then hoping for the best. You know, we want to place a trade and be aggressive with our risk management. Make sure we protect our capital and allow us to give us, or you know, look for the best opportunity possible and try and place the odds in our favor. That's really what we're doing with trading. We're not here to be predicting the market. We're not here to look like we have a crystal ball. All we're here to do is just follow along as to what the market tells us. Okay. Now pop it over to the NZD USD. Now New Zealand dollar is extremely messy, you know, this week. We've seen ever since that gap. This is the 4-hourly term time frame. We can really see we had a gap got filled, and then we're just sitting in a really horrible move to the upside, right? Lots of wicks, uncertainty. The market doesn't know what's going on. It's just a really big struggle. So if we have a look here, if I pop my drawing tool up, we can see on this side, you know, the market is slowly starting to move into some sort of a pattern. We do have a bit of a flare coming up, so we could potentially use this high. You know, we could potentially use this high to reject and break further lower, right? This could be a very good bit of analysis we could use. You know, if we don't break further high, we could use this, because this market is really slowing down in volume. It's struggling to reach that top. You can see it's really struggling to go high. It's just almost reaching for that support 0.68100 mark zone, major psychological level again, and it's really just giving it all just to get out there, right? Just to get out there. So this could be a good indication that the market is ready to reject, or that something major is about to happen. Now again, I'm not going to say 100% that the market is going to stop right there and drop back down. That's just going to be silly, because if I'm going to put a bias to my analysis, you know, and then the market breaks above, what am I going to do? You know, I wouldn't know how to react. So again, if this market is struggling, if it's uncertain, you know, and it breaks for the high, I need to be prepared for that. Let's have a look at the daily term time frame. Daily term time frame, we can see We are still sitting on a major support, so I mean, things are looking good to the downside, but we can never be 100% certain with this. This is why we have stop losses, guys, right? And I'm going to keep implementing this. I'm going to keep talking about this because it is crucially important about how we manage our risk as traders, right? Now, let's say, for example, I took a sell, no stop loss. Market decides to pop higher, right? No, I'm right. I see a little pullback and I say, oh, finally, it's over. Market is ready to reverse and I'm going to start making some money. You know, once it starts even entering my break-even position, I'll just close it there and take a little bit of money off the table. But that never happens. Goes up again. Okay, I go, okay, we've got some support coming up. You know, I've got some support coming, sorry, resistance coming up. Market reaches it, rejects, I go, finally, market's going to push back down. I'll just wait right over here. You know, once the market reaches my break-even, you know, I can close the position and that, you know, be safe and take a little bit of money home. Nothing happens. Market continues to push for the higher. Okay, now I wait. I see, okay, there's a resistance coming up. The market could come back down again. Rejects it a bit. Finally, it's over. And lo and behold, it goes back to this high, you know, and I might have got a margin call by now or lost way too much capital or try to sell it every single time it reaches a resistance. But now, once everything's done, once the trade is done, I step back and go, I should have bought. Right, the market has given it to me. Rejected, goes above, you know, beautiful. Rejected, goes above, there's an entry. Rejected, goes above, another entry to the upside. In the meantime, while I'm trying to battle the market and say, no, I've done my analysis, this should go down, the market keeps bump, and keeps going higher, right? So, this is the one thing, guys. This is why it's so important to not be right, okay? It doesn't matter if we're right or wrong. We're just here to, like I said, analyze the market and, you know, follow what it does, okay? That's all we're here to do as traders. We're not here to be right. We're just here to follow along to what the market provides us. Okay, now back to the analysis. So I pretty much did analyze that's actually what could happen if the market does break to the upside is generally what we'll be looking at. We have some pretty major resistance zones coming up. We have some pretty major resistance zones coming up that we could look at, that the market could, you know, if we do continue further higher using NFP or any UK news, that's a good zone to look at. 0.68820 mark zone would be a good target to look at. And then obviously if we do break further higher, you know, obviously higher options we have, like I charted out before, 0.7860 is a good place to look at. If we do continue further higher, then obviously we do have this high coming up roughly about the 0.7200 mark zone. Major 2000 mark zone, actually, major psychological level, right? Big zone for the market to push into and to reach. That's why we tend to see a lot of rejection around these round numbers or psychological levels, okay? And we also need to keep in mind, once we start dipping into this area, right, it's very consolidating. There's lots of movement going on. We can see, you know, the market has pretty much struggled every time we reach into old consolidation zones. So we could kind of expect that. That's generally speaking, if I do take a buy to the upside, in my opinion, I try not to have my take profits all the way at the top or my targets all the way at the top, because the market might not always reach it, right? Because this is kind of where that resistance does start. So this will probably be where my TP is, you know, because it's more secure, right? Again, I'm not here to be right. You know, if the market runs up to there past my take profit, it's fine. I've banked, you know, I potentially have banked all of this profit right over here. So I'm perfectly fine with that. Or even, you know, I could have even banked some money here depending on what the market gives us, all right? Now, if it does run up, like I said, it doesn't matter. But the thing is, you know, it could very easily reject here and push back down, pushing into the support. Because as swing traders, guys, or as any traders, really, we are just trading from zone to zone, right? We're trading from zone to zone, or from zone to zone. That's really all we're doing as traders, okay? We're just following what the market gives us, looking at the support, looking at the resistance, and following along. I'll look at the USD CAD as well. USD CAD's fairly messy, 4 hourly time frame. It does look like there is a bit of a something going on here. Not the nicest channel, but it is giving us something here, okay? We can see it's already starting to reject there. Pop over to the hourly time frame. Very nice rejection, okay? This is what I'm talking about, guys. If you guys remember what I spoke about earlier, if you guys do remember what I said about those big candles, you know, major candle, pop to the upside, straight away, next candle, not even any hesitation, bang, straight back down, all right? Now we have a nice rejection here, so we could potentially be looking, if the market stays below, we could start to look at moves further to the downside. Okay, so we need to be aware there are some support / resistance zones coming up. I've got here the first one, 1.26430 mark, and then obviously the other zone over here, which is kind of a consolidation area for the market, 1.26230, sort of again that we're looking at. Okay, now generally speaking, now that we're on the topic of channels, let's zoom out a bit. I personally don't like trading against a channel for specific reasons. I'll quickly break that down for you guys. Why? Because if we are sitting, let's say for example, I'll just draw it over here. Actually, I'm not going to use this channel. I'll just I'll draw my own one so I can kind of break it down for you guys. If we have a channel to the downside, for example, right, and the market moves within this channel, right, I'm not going to trade against it. Reasons being, if I take an entry right over here and I place my stop loss below that channel, below that low of the channel, the market could still follow on this channel and eventually come to stop me out. That's what I don't like about channels. And the other issue is, even if my trade does go into profit, the longer this market stays in this channel, the smaller my take profit target becomes, because that zone for the market to push into becomes lower and lower and lower the longer I wait. That's why I don't like trading in the channels. Now, trading with a channel is that exact opposite, right? Channel to the downside, market moves, I've got an entry, right? Take my entry, my sell for example, stop loss above. Now the market could just stay on this channel and I'll still start going into profit. And the other nice thing is, the longer the market stays in this channel, the bigger my take profit target becomes, right? It can just drop straight away, but it can take its time and also give me a bit more out of it, right? That's why I love channels. So, in saying that, we need to also look at, we need to keep in mind that we do have these support / resistance zones coming out as well. Right, we do have these coming up. So we need to be aware of those, right? That where the market could potentially stop on as well. The market could reject on and then continue further high and then actually use that to break out of the channel. So just be aware of all those guys. Like I said, as a trader, we just need to watch what the market gives us. We can see, even though we had all these support / resistance areas, we had this consolidation zone, the market, even with this gap, it used that gap to push further higher, right? Right, and it's still kind of, you can see it struggles around these zones, but it still followed this channel fairly nicely. You can see it had a bit of hesitation around that support, and the market pushed further higher. Okay, so it's aware of these zones, the market's aware of these zones, but right now the channel seems to be playing out fairly nicely. So I'll put my odds in the channel. Now again, if I get stopped out, that's fine. I'll start looking at other options and seeing what we have. Okay, gold. After gold, I'll look at the Dow Jones. Now, if you guys remember gold, good old gold, it's been a bit of a pain. This is the hourly term time frame. I want to look at the 4-hourly as well. We can see that the market just has been struggling ever since it broke out of that resistance, right? So if you guys do remember, actually I'll quickly pop it up to the hourly, zoom it out just a little bit. We had this initial internal support / resistance zone, right? This internal, well, this smaller sort of consolidation zone right over here, okay? Then eventually the market broke above, created a new high for that zone. We had a bigger consolidation zone, and now the market seems to be playing its games, right? So we had a breakout, beautiful breakout, a nice push to the upside. And if you guys remember, we started pushing towards that target, that bit of consolidation here. This is a monthly / weekly resistance. We saw the market break out very nicely, and then what we were looking for is the market to push back down, use that support, look to push further higher, and start to reach these targets back up here, okay? That's kind of what we're looking for, but we can see gold has been, with this NFP, the uncertainty in the market has just been absolutely struggling. Just having an absolute struggle in the market, really having a lot of issues. So this is why, you know, now we can potentially look at using this NFP for the market to give it that little boost up that it needs to run. Now, it's a very long way away. I'll admit that it's a very, very long way away. So I'm not going to bank on it. This is why we don't, you know, I'm not going to say I'm 100% going to happen, because if I was that, you know, I'll just put a trade up here, stop loss wherever, and take profit up there. But again, the news could very likely do that. Right, and I get stopped out and then just continues on in here. So we could maybe look at using the news to push all the way to the high, touch it, and then start to come back down, and then we'll have this major consolidation zone that we'll be playing in. Okay, but for now, I mean, gold, you know, it followed the technicals, it still followed the technicals, but it just has not given us a reason for entry, right? It just hasn't really given us anything to say, hey, look guys, I'm ready to go up, I'm ready to give you a move. So it has not really given us that. We just have seen a lot of consolidation. We might have a little bit of a sort of pattern or a bit of a channel thing forming here, but you know, it's still a bit sketchy. It doesn't really look that great, so I'm just going to ignore that. Gold is not looking so pretty leading up to NFP. So for me, I'm not even going to be looking at gold for the rest of the day. Even if it does give nice moves to the upside, you know, I'm not really going to be caring too much about it. Last pair, Dow Jones, US 30. Daily term time frame, we can see nice support. We'll zoom it out a little bit. We can see we're sitting on support, major consolidation zones, major wicks rejecting, just having a bit of a nightmare to break through that, bit of a struggle to break through that support. Looking here at 32969.60 is kind of where we're struggling to push down through. It can actually be 3260-ish. We can see the market's really struggling to break through. So again, sort of roughly around that psychological level. 4-hourly term time frame. I like this. I'm not going to lie, I do like this. It looks very nice because we have a zone re-entry. It's again one of my favorite trades. We know that this is a major support zone, and we can see the market has now used that to reject. So we could potentially be looking to reject it. We do have a bit of a consolidation zone, obviously, but we could easily look for the market to reject and push further higher because it is an overall support, a major support where the market is struggling. And we know as traders, what we do is trade from zone to zone. So zoom it out again. I'll get another zone over here. Right. These are our higher zones. What we're looking for, we're going to be trading. Yes, we have internal support classes and zones. Yes, they could cause a bit of an issue like we've seen over here. Right. It's kind of coming close to it, but we also have that resistance coming out here. But as traders, we're trading from zone to zone. So this is what we'll be looking for. Until the market breaks above, further moves higher, breaks below, further moves to the downside, right? Knowing the Dow Jones or the US 30, knowing it's, you know, what it is, you know, we'll see big drops. You know, the market always has corrections, but generally speaking, the market will continue further higher unless the entire economy collapses. But generally speaking, the market tends to have an uptrend. Now, I wouldn't just knowing that the market always going to uptrend, right? We're not just going to buy it and leave it because, you know, buying and leaving it, there goes your entire account potentially, right? It's a pretty big move. So what we will want to do is we want to look for entries, stop losses, places where we can think, okay, well, this is going to be a likely place, right? We are aware that the market can go up long term, but we need to start looking for entries. Breaks and retests, for example, are a great idea for them to look to go further high. And now we did have them here. Big drop. We won't always be right, but that's why we have stop losses. We won't always be right. That's exactly why we have stop losses as traders, guys. Bit of a long video, obviously. US 30 is coming up. I'll close that. US 30 is coming up. Even my computer's saying enough now. Get on with it. But I hope you guys did enjoy it. If you did, make sure to give us that thumbs up, guys. Also, leave any questions down below you might have. Any other pairs you want to see for next week. We want to be doing these videos, like I said, every day. So let us know down below in the comments if you have any questions, or if you've just subscribed to the channel, comment down below. Let us know you've subscribed, and we'll get back to those questions or any comments that you guys have. Now also subscribe to the channel, like I said, if you guys are interested in learning more about trading or improving your current trading skills. From everyone here at BlackBull Markets, enjoy your weekend. NFP is coming up, so make sure to always trade safe.